Want to learn about what no one tells you about buying your first home and how to save money? Watch this. What's up guys, it's me Jose, and today we're going to talk about how you can save money and how to think like an investor when you're buying your first home. When you're buying your first home, you will be scared and maybe intimidated because this is one of the biggest expenditures. Besides, we're human, we also tend to make our first purchase an emotional one. Imagine when you got your first car, when you got your first significant other, that type of emotion is what I'm talking about. To be a pro at this, you have to understand that those feelings are gonna be there. Say hello to them, but don't let them control your decisions. Quick disclaimer, I am not a financial advisor, so consult with yours. But if you want to support this channel with all this free information that I'm giving to you, please just subscribe to the channel, and please help the like button become blue again. And if you want more detailed information and perhaps more personal information, I'm gonna be creating a Patreon really soon, so stay tuned for that. Okay, let's continue the video. To really understand your finances, set aside time and go through everything that you're spending money on. Make sure you understand where your money is going and where your debts are. This is priority number uno. The bank uses a ratio called the debt to income ratio, DTI for short. This ratio is used as a percentage, and they're looking for potential customers to have a ratio below 42%. So how do they calculate this? They add up all of your minimum required payments on all of your debts. That's all of your minimum payment for your credit cards, all of your loans, your car loans, and anything else that you owe money on. They add all of those up, and then they divided it by your gross income. So really understand where your money is going. Do this ratio for yourself and see where you stand. If you're seeing something that is below 42%, then you may be a candidate for a traditional mortgage loan. If that ratio is above 42%, then you have to check your financial habits or get out of debt and figure out a way to bring it below that. But obviously, that is not the only criteria that is important. They also look at your credit score. So you have to check your credit score. You have to make sure that everything that appears there is actually something that you have done yourself. These lenders, they have many different tiers. The higher tiers is for the people who have the highest credit scores. Usually somewhere above 720 is what will qualify you as a tier 1 prospect. Not always. Every lender has their own determination and some things that they have to do, but usually you could be safe above 720. If you want to understand more about your credit score, I've made 2 videos about it. I'm going to put it in the link down below or somewhere up here. Another step to buy your first home is to prepare to put a down payment. This one's interesting because it highly depends on you and your situation. Traditionally, you will save up to 20 to 25% of the value of the house that you want to buy. If you have $25,000 in cash, then you can get a house up to $125,000. Easiest way to do this for me is just you have a down payment. If it's 25, multiply it by 5, that's 20%. That's the highest value that you can get out of it. But also, I understand this is your first home, so it's harder to come up with a down payment. So the government has created programs to help us, the buyers. Programs that are based on the federal government and based on your local government. One of these programs will allow you to put a lower down payment on the range of 3.5%. This is usually called the FHA, as long as it's your primary residence. In other words, you have to live in it. And that way you can pay much less money for your first home. On top of that, like I said, there's local help, local aid. And this could be like a county help where they have down payment assistance programs. Sometimes they call it home ownership assistance programs. Let's say that you have your parents or your uncle or a friend, close friend that wants to gift to you the down payment. This is possible. Lenders will allow that as long as you disclose it. Usually they have some requirements because if you don't disclose this to them, they'll have to take it into account as part of the loan. So it's better for you to disclose this to them so they know exactly what is your financial situation. Also, there's all the different type of loans, right? So you have the regular traditional fixed mortgage rate, and you have the ARM, which is adjustable rate mortgage. We're not really going to talk about that right now, but you also have what they call the VA loans, and these are loans specifically for people who have served in the military. First, thank you. Second, this loan allows you to put 0 down payment, so the entire amount goes as a mortgage. So this is a good help for people who have served in the United States. In that same note, the government also offers what they call USDA loans, and these loans are backed by the Department of Agriculture. These loans are only available for USDA eligible areas, and these areas are usually for for farms and rural areas that they have qualified for these loans. Now we got that part covered. You check your finances, you check your credit score. Now you have to find your house. So how do you do this? Traditionally, you will just go to your real estate agent and ask them about your area and tell them your requirements, your criteria. Could be, good schools district, either a bigger home, 2-floor, 1-floor, or some type of good location based on your needs to minimize your commuting, all of that stuff. You will go tour them and then decide from there. That's traditionally how it works for retail customers. And no worries, the real estate agent gets paid by the seller, so please leverage them. They are going to be paid by the seller, so they are there to help you get this property because they only get paid once a property sells. Today you can also start your own search, right? There's many known apps like Zillow, Redfin, Realtor, LoopNet. You got Craigslist too if you want to do that. But my favorite one is Redfin. If you have a favorite one, let me know in the comments down below. So maybe I haven't seen all of them. There's a lot of them, but those are the most popular ones. All of these homes usually show what's already listed in the MLS. The MLS is sort of like like a listing directory where you go say, hey, my house is for sale, put it here. But some of these apps or platforms, they actually have unique listings that are only for those platforms. So they're not listed in the MLS, but they're listed in those platforms only. A little bit less traditionally, but there's also I've seen really good results is when you actually join platforms that are dedicated for real estate. One of these platforms is BiggerPockets. If you never heard of it, biggerpockets.com. There's a link down below and go check it out. Okay, you found it. You found the house. You did it. It's everything you want for all the criteria. It's all checks. You walk in there and you feel like it's meant to be for you. It was built for you. It could not be more perfect. It is the one. This point is where you have to take a step back and really think about this. Go to the basics. Look at how much is it listed for. Is it over what you can afford? If it checks all of those boxes, guess what? It's time to make an offer. But wait, you want to be a pro at this, so don't rush right in. Wait for this, listen to this. You already started negotiating. You don't know it, but you already started. You're negotiating with your emotions right now. This is the first type of negotiation with yourself, especially for your first buy. So treat it like a negotiation. And here's a pro tip. And a good real estate agent will do this for you automatically, but if they don't, here's a pro tip. Ask them for comparables. Ask them for houses that have been sold within 3 to 6 months in that same area that are very similar to the one that you're looking at, so that you understand how much those houses are selling for at this particular time. Why? Because the house may be listed above that value. And if it's listed 10, 15K above that value and you're not seeing that right now, it's time to make a lower offer. So at a minimum, consult with your agent. If you're not using an agent, you can do this yourself by going to the apps we mentioned before. They have different filters that you can go through and check all the data they already have there. The data is almost the same as the data in the MLS. You can do this yourself as well. Me as a real estate investor, I do this exact same process. Now, let's say that you want to take a second look at this house. You understand that you are emotionally invested in this. So you have to bring somebody into the equation who is not and who has your best interest in mind. This could be a handyman, this could be a general contractor, or somebody you trust to take a look at the house with you. If you cannot make another tour in the house in person, then at least look at the pictures or have some video from the first time that you can actually show that person, because that person can actually identify what could be a major repair for you. So a red flag, something that you might have not seen. For example, I personally, when I was looking for one of my investment properties, I saw one that was in a great area. It was good, but I did miss something that was quite important that led me not to buy that house. And that was that a balcony was transformed into a kitchen, right? A balcony was transformed into a kitchen. So they closed it out from the second floor and they transformed into a kitchen. That totally had code violations everywhere and it was a nightmare. So because the agent pointed out to me, I was able to stay away from that investment. So make sure that you have somebody there on your side that's willing to look at the house with you, that is not emotionally invested. You can also ask them for quotes on the fixes, just potential quotes. They don't have to be specific, so that you know how much something could cost. And you can use this for your negotiation. And this could be if it's something that is seen as a total of $5,000 and you can reduce your offer price by that amount and then send the offer. Okay, let's say offer was sent. There was time. Now you're waiting, hoping that the seller agrees. Let's assume that the seller agrees, right? Good news. You are under contract. Now that your offer was accepted, you want to know what's next? Check out the next video and I'll tell you what to do next and what to include in that offer. Thank you for watching. See ya.